Hello. Hello. I was telling Scott, I wish he had given me advance heads up. I would have put some Eagles stuff on mine.
It doesn't matter.
How's everybody doing today? Enable chat, all messages. There we go. All right. Lydia, Sandra, Ed in San Jose. How's everybody doing? Good to be with you guys again on yet another Thursday.
Lydia, hold on a second. Lydia's got a question. Anyone get filled in the Amazon Fly? That was canceled by Peter.
Right, but it was canceled at like 3:58. But still, there's no way it would have filled. I mean, if we were trading right there, I don't think anybody got filled. There was no way. I certainly didn't get filled. I mean, I canceled it with it was like a minute and a half to go, and I just said, whatever, I'll just cancel it. But there was no way because the implied volatility at those strikes around there was so crazy that whatever. The reason that I sent that out is because the order was GTC. So I didn't want you guys to leave that order in for tomorrow. It had nothing to do with today. I knew it wasn't going to fill today. I just happened to send it out like a minute before the close. Most people got it after the close anyway. But because it's GTC and Amazon is currently trading 1422 after rallying all the way to 1450, I think, right? There's a good chance. I mean, it looks like it could go to 1400 tomorrow. So we could be looking at a winner on our hands with that butterfly that we only paid 39 cents for. If we can get a couple bucks for it, that would be wonderful. I mean, we really only have to come inside of 1410 for that to really start to expand. So, yeah, Mamba, if you got out, if they filled it at a scratch, no big deal. Then at least, whatever, you're out. But I think there's something there possibly, given where we're trading now around 1423. All right, let's get into it. So right now I've been saying in the daily update, or I had said in the daily update that I felt that once these three earnings are out today, which is Amazon, Google, Apple, that's the rest of FANG that needs to report. We already heard from Netflix relatively early and Facebook yesterday. Now that all the FANG is out, as far as I'm concerned, the season is over. I could care less about everything else. I don't think there's anything there that's going to move the market in a big way. Right now, for instance, NQs are down 64. Why are NQs down 64? Because of Google. Google's down $60, right? I mean, that's a huge part of it. So you can see how outside of what we're seeing in FANG, I don't think there's really any market mover. And this is good news for us as traders because now, and again, as I wrote in the What's Peter Thinking, we don't have anything to really worry about going forward other than possible geopolitical risk or Washington stuff or whatever. And we're not going to trade that way. We don't care about that. That can happen at any time. More than likely things just kind of plod along and we'll see what happens. So this will set things up nicely, I think, going forward. All right, let's get into where we are market-wise and where the key levels are that we need to look for. And then I'm going to get right into trade ideas because obviously we have nothing on other than this Amazon butterfly. And I've been very quiet with new trade ideas, relatively quiet. We had a few good trades last week. We put on a decent amount. And but so far this week I haven't done anything because I've been waiting on these earnings to get out of the way. So without further ado, let's just take a quick look at where we're at. And I'm going to actually use profile for this because I think it's just cleaner and easier.
While you're doing that, Ed, Apple will not report for about another 30 minutes. Remember, their West Coast time, and they typically do a 4:30 start to their conference call and their release of notes. So got to give it some time for Apple.
Okay. So let me show you. You'll lose screens for 1 second. All right, you should see this market profile, which is one you don't see that often because it's the NQ. And I want to start with this NQ just because to show you the dichotomy. And obviously this is all off the Google earnings, but notice that this is where we are now at the green line down in here, trading currently, and we closed down here. 68, 98, 50. And remember, these trade for an extra 15 minutes. So after the NDX closed, then Amazon and Google reported, and this went down like a stone and closed down here. So right now, NQs are off 64. And look at the difference between that and ES. ES is down 3. right now. 3.25, 28, 22.50. And very important, right? Look where the, hold on one second. Look at where your high volume nodes are. Here and here, relatively close to each other, correct? And then look at this action here. So this is an overnight low, which is a spike. This is a poor low, but is also a spiky bottom. This has a little bit of excess to the downside. And while this has been going on, right, value has been more or less equal, right? Overlapping to up, overlapping to down. And price hasn't really moved a lot. I didn't mean to draw that last one. Correct? So that being said, where is our focus going forward? I've been saying this is the focus right here at the 2840. And notice that it matches up with these high volume nodes here. So there's plenty of reason why when prices came to here, they backed off. But what's more important about this, because I honestly don't think that here was any great short. It wasn't any kind of major, like, awesome short. The reason I say that is because you can see the market. I mean, you know, it did fall, but there's been absolutely zero follow through since then. And because there's been zero follow through since then, you can figure that these people here are getting shorter and shorter, right? All of this is short. And what's going to happen if we go here? And I don't know if that's going to happen, but I'm just saying, if we go here, it should be kind of a decent move to the upside. So the 2840 really is the key. Now, tomorrow, what's going to be the key is whether or not the FANG stocks and the NDX pulls down the SPX. And I don't think so, because right now it's kind of split. Like Amazon, as you know, is up. It's trading about $14.30. So it's up about $40. It went as high as $14.55. So it was up $65. So they closed at $13.90. So that's fine. And Google is down, but is now rallying back. So if Google rallies back and then the NQ has this big snapback, the S&P could rally, right? That's what I'm looking at. Now, obviously, we've done the smart thing, I think, and not having any major play ahead of that. But I think there's going to be opportunities here if we cross that 2840 or whatever. More or less, it's also going to telegraph to people out there that these FANG earnings are out now. There's nothing to really worry about, and pullbacks could be bought, basically. Right? Pullbacks are viable, or we can kind of do whatever we want to do with options on a lot of different names.
Peter.
Yes.
Take a look at Apple. They're releasing numbers now. Okay,
fantastic. So Apple is releasing. Let's take a look. Apple's rallying. That's going to be good for ES futures. It's at 169. Let's go back to here. Let me see if I'll switch the screen share for you. And we'll get the screen share back onto here. And let's go like this. All right, so there's the after hours move in Apple. Not major, but it's okay. Pretty good. And here's Amazon, as I was saying, is now rallying a bit after pulling back from 60 to 10 down here. These after hours moves are just huge because obviously there's nobody really there. Right? And then we have Google, which was down a bunch, but look what it's doing now. Now it's only down about 28. It's at 1150. It was up here at 1178 up here. Right? Google, it closed at 81, and now it's at 50. So it's really only down 30. So a huge move there. So we can assume that all this stuff is going to probably open flat. And again, going forward, I'm assuming that everybody has gotten themselves very short in the S&P. And so we'll be looking at that 2840. And that 2840 move will then give us a lot of confidence to get into some pullback stuff or some stuff moving higher or whatever. All right, understood? Does anybody have any questions just on what I've just talked about, just on the profile or just on the broad market, what I think is going to happen, or or how we're going to navigate this going forward. So I want to keep this moving. And I'm totally open to taking questions whenever, but I like to keep it moving here. So that when people watch this, and a lot of people watch this in the recorded version, and I like it to be as kind of concise as possible. All right, so I think everybody's cool with what I'm saying there. I think you guys understand. So let's get into ideas, all right? Let's get straight into trade ideas. First thing I'm thinking is Facebook. And let me put these, let me do the chart fills for the appearance. I don't know why the fill up thing doesn't stay. That's really annoying.
You have to save that style if you want.
You have to save that as a style?
Yeah, just save the style.
Oh, into the style. Got it. Got it. Into the style. Yeah. Okay, that's fine. All right, so my first idea is Facebook. And again, this is all tying in with if the market opens flat and we're okay. Can we collapse the left side of the screen, give it more room? We can do that, yeah. We can just push this over like that. Okay. My first thought is that hold on. Move this over. Is that this area here should be a magnet for Facebook because it's the big round number. So two things are going to come into play in Facebook. I think that it has a good chance of going to 200. And beyond that, Facebook generally has a big move on earnings and then does nothing. And it kind of did that already. It had a decent move today, and then it generally does nothing. Oh, wow, Apple down a lot now, by the way, guys. Heads up. Apple down to 163. You guys see that? So Apple's down $4.
It went green to red.
Yeah, it went green to red. Apple getting really hit. We can take a look at that. There's the big red candle. Wow. Ugly reversal. All of this is going to spell opportunities, especially if the S&P opens up flat to up and moves into up to that 2840 and threatens to fill the gap. All this will spell opportunity because it'll spell opportunity in the form of put selling, basically, in a lot of these big names. All right. But anyway, Facebook, I digress. Facebook to 200, strong possibility. So a lot of different things we can do. I'm giving you advance heads up on what you might see via text message tomorrow. So look on the screen here. We could be unbalanced as a 132. It's a possibility. 195, 200, 205. That's trading 35 cents right now because obviously the stock closed a little weak. So that would expand for us. This one probably not. I also wrote down that we might be interested. That's for Feb 2. We might be interested in the Feb 9 straight butterfly around the 200. There's 50 cents credit at the 200 strike, which isn't bad. Again, I'd be thinking 195. With Facebook, you don't really need more than $5. It's not a big mover. That's good risk reward as well, 86 cents. If we get volatility tomorrow, kind of all over the place, I would probably be looking at both these spreads, but this spread is really intriguing because 86 cents, I feel like I could recoup somewhere in the chain on the put side if I went out to Feb 9. So if I was looking at, for instance, Facebook, and I was wondering, like, where is support? Maybe here, like that, or underneath this low is 181. Maybe at the 180. We'll see. Maybe a move down would help. We'll see. But I'm just talking out loud and kind of giving you guys advance heads up on what I'm thinking. Oh, wow. Apple right back to where it started. That's a crazy move. Look at this move.
It's on the guidance.
Yeah, right. It's always that stuff that comes out later. Wow. So loved it, hated it, loved it again.
Kind of like Facebook last night.
Yeah, exactly. Facebook had a very wild move. iPhone units sold 77 million, but estimated to be 80 million. So less iPhones than they thought.
That's better than a lot of the pundits were writing the last week or so.
Right. Okay, the other thing we're going to be looking at in Facebook, remember, as I was saying, that Facebook tends to not move a lot. There's going to be possibility of iron butterfly around the 195 or 200. So just keep that in mind. So I'm looking at that. All right, next up is going to be BABA. All right, BABA has support at 182. We may be doing something tomorrow or the next couple of days off of this support. That's right here. 50 MA daily is here. It does trade on both sides of the 50, but I like the 182 area right in here. So we may be doing something with BABA, and and there's a lot of different things we can do. We can make a play that assumes that we stay in this range. We can make a play that assumes maybe that it's going to be bearish and goes down to the trend line. We can make a play that it'll break out the other side. But when you're in the middle of the range, and it could go either way, if you can do it creatively with, say, unbalanced flies or whatnot, there's ways to kind of play maybe a move to both sides, or we could do iron butterfly in the middle here at the 20 and figure that it's going to move within this range and collect some credit. So that's another idea that I am thinking of. All right, next, Microsoft. We will, if the market holds and looks like it's going to keep rallying, we will probably structure something cheap on the upside with the idea that we're going to 100. Right here. So that will probably be a butterfly. So that's going to be interesting. I'm looking at that. Next on my list is Copart. And this I thought was interesting just in that it was coming down to the 50. The options are not the greatest in here. We don't have weeklies, only monthlies. And you see here that it's never good when the strikes are just like this, like 5 wide, and it's a relatively cheap stock. See how this goes like 40, 45, 50, et cetera, down in here? That's never really good for options players when it's a relatively cheap stock. It's okay to be 5 wide when you're Amazon or Google or whatever, but this is just difficult because you can see that they want 350 by 430 here for the $40 that are in the money. And then here, this is, let me see here, Feb 16. This is probably mispriced, but you know, it's not good. 43.62, 20 by 25 for the 45s. Let's see here. Yeah, I mean, maybe a cheap play on those 45s because they would expand. I don't know. But anyway, I like this. This is IBD 50, and it's the first pullback to the 50. So it's on the 50 list, and then notice here that they're not reporting till 220. So that is that's a possibility. All right, next on my list, 5, I believe, has a low-risk entry point. This is also IBD 50. And notice that you have this area breakdown. Could be a look above and fail. I know this. I think we talked about this last week, right, Scott? We talked about whether or not this was a head and shoulders.
Yes.
We both of us didn't think so. Both Scott and I agreed that this is not really a true head and shoulders. True head and shoulders would be like this, and it'd be splashier at the top and up like this, and then you'd see this. That would be it. But this clean structure here of just spike like that, not really a head and shoulders.
If you want to make it a true head and shoulders, you've got to come down to the consolidation and then the move up further left where it was at earnings.
That is correct.
Then you would have head and shoulders, or I don't know, a helmet with a pointy top to it. I don't know.
Something like that. All right, so this is my next chart that I'm interested in, and I haven't quite figured out how we're going to play this, but this is a chart of the natural gas index. So this is obviously charting the stocks in the natural gas index, and then if you notice, we could also take a look at UNG, which is the ETF for the gas itself, I believe, right? And I think the pullback is going to be viable here. The stocks tend to trade kind of crazy, and you can see these big moves. They tend to have these 100% retracements. So obviously, where are we interested? Right here for the bounce play, right? So we're going to be looking at, I'm going to put out ideas that you can look at UGAS on the stock side. This thing is a beast. It moves like crazy. You have to be very careful. But more than likely for the advisory, we'll be interested in COG because Cabot kind of moves with the index. And you can see Cabot has similar moves. And so somewhere in here on a false break, we'd probably be setting up a move to the upside. I'll look at other ones as well. I know that there's APA, And then there's PXD as well. PXD is showing a lot of relative strength. APA might be in play just on the fact that if it continues to go sideways here and the XNG goes down and this stock doesn't, well, then that's a strong buy to the upside. So that's another name we're going to be looking at. All right. And then beyond that, keep in mind that I may do something tomorrow in one of the three biggies, in Apple, Amazon, or Google. There's a possibility. Amazon is now trading. Apple's back down, by the way, to 165.
Yep.
Amazon is trading. Let's see here. Really strong. Wow, 1485. Really, really strong. So that may actually set something up for next week for the 1500 pin. Maybe that's what we'll be looking at, is the 1500. Like, let's say it opens up strong, and early on we see like first 5-minute high that it's holding, and we have good strength. And I'm saying if it opened like here, if it opens very close to 1500, it's not a good play. But let's say the stock opens close to here, I would probably be really quickly thinking of like a 1480, 1500, 1520 butterfly, something like that, to capture a big piece of that move as cheap as possible, knowing that if the stock is trading 1460, 1470, you're probably not going to have a lot of sellers around that whole number. Or people are just kind of going to kind of be waiting to see that 1500. So, all right. That is all I have today for, that's it. That's basically my presentation. I've talked about what I think is going to happen in the broad market, where we need to be active, and I've given you an advance heads up on what stocks I'm interested in over the next few days, basically between tomorrow and the end, early next week. Those are the stocks that I'm interested in. Does anyone have any questions on anything that I talked about? And we obviously only have one trade open. We can talk about the big short as well that closed this week. I don't want to gloss over that. Obviously, that was ugly. $3,625 loss officially on those two contracts on the call side. We did bring in that credit on the call vertical at 370, but we ended up losing more money on it because I thought that we would come down under, I thought there was a chance we'd come down under 27.45. And then unfortunately we rallied like another 100 points higher. So, not too thrilled about it, but I am thrilled about the fact that it's finally closed now, and mentally I can move past it and, onwards and upwards. James says a larger correction is not in the cards in your view. Not now. No, it's not. And that doesn't really mean, James, that I think the market is going to scream up, but why would it correct now? I mean, if these big FANG names open flat and start climbing higher, what's the catalyst? And plus, like I said, James, is if we go back over the 2840, which is not far away in the S&P, what do you think is going to happen with that big gap above us? It's going to fill that gap very quickly. All these people are short, and then you're going to be back at all-time highs again in the S&P. And that's a very hard pattern to get lower out of, James, because think about it. You went liquidation breakdown, and then boom, V-shaped reversal right back to the all-time high. So what's going to happen after that? Probably more sideways, more sideways to down, if anything, or sideways to up. I wouldn't even be thinking about shorting that. Anybody else? Lydia says, will we need to break apart the Amazon fly to close it? No, I think that what's going to happen, Lydia, is when all the strikes are in the money tomorrow, we can just pay a nickel to close it, or 2 cents, it should close. A nickel at the most, it should close. If we have to pay up a little bit to close it, it'll be another $10 on the 2 lot. So I'm not too concerned about it. If you want to just pay what is it called, Scott? Not the assignment fee. I'm losing my mind. Exercise, yeah, the exercise fee. It'll just be a wash, like if it's all in the money, But we'll see how it trades. I mean, if Amazon is soft, like I said, anything under 1410, remember you're on day of expiry, so it's going to expand. You're not seeing it expand now, but when the time goes down to hours, if we can get anywhere near 1410, we should be able to get out with a profit. So,
if you've got nothing else to do, just watch the way the bid-ask spreads move, and take a look at the column for gamma. it's going to go just like a Mexican jumping bean.
You're right. Question was right here. Do we have any interest in DQ at 52? I would say yes. I would say that could be in play. This is also IBD 50. I'm not too thrilled about the fact that it lost the 50 MA, but yeah, I would look at it. I would keep it in mind. It's the options aren't good in it. Mamba says, can you look at the gold and the euro? So no change really in gold. I think it's short-term bullish. I like the way that it's starting to have a little like smile here of the pullback. And I think little by little we grind higher. What I don't like about it is if I look on the weeklies, I can't really wrap my head around starting a position here because on the weeklies you can see that it's straight up. And in gold, I generally trade off the weekly charts because I want to be looking longer term in GLD. So I like the fact that it's double top here. I'd like to see pullback here and go back up here, and then maybe we do something.
Yeah, if you take a look to the left, you can see when you've had a rally that many days up, you typically have some sort of retrenchment.
Yeah, these are weeks, but same thing, Scott. Yes, these are weeks, not days, but agreed.
No, I understand. That's the chart that you really should be using for gold.
Yeah, exactly. And the other question was, can we look at the euro? So that's what, 6E?
6E.
Yeah, 6E looks phenomenal. I think this is going to continue to climb. And I don't know what else you want me to tell you, but if you look at the weekly, you're kind of in clean territory here. If we go out to the monthly, let's look at where our trend lines are.
Ooh, downtrend line looks interesting.
Yeah, downtrend line is very interesting. Wow. Okay, so this is very interesting. So I would say 6E short pretty soon. Long trend from 09. It's probably not going to break trend without a big pullback. I would say 6E short. We could do, correct me if I'm wrong, we could do FXC, correct? And they have weeklies.
That's been very hot this past week and a half on the Twitter feeds.
Has it? Interesting. Yeah. Well, that's what the kids are talking about, I guess.
And that trend line is even closer. It breaks above the 50, and then it goes, right to that trend line.
Very interesting. This could be good because notice that here around 122, look at the implied volatility on these, how low it is. There's like no IV in these. So you're basically just, it's almost like just shorting the stock. Like if we were short here at 122, we would just probably buy these cheap puts. I would say I'd be looking like maybe 2 weeks out here. And yeah, this isn't bad at all. I mean, we could even be looking at possibly a call sale. I mean, look at the 122.50. Let's see here. 122.50, 120. What's traded? 124. 20-cent credit. I don't know if I like that much, but yes, I'm glad you guys brought this to my attention. I'm putting this on the list as a possible trade, and I will have an alert set on the euro for a short there.
And I'll put one on the time spreads for a put diagonal or put calendar on the FXC too.
All right. Yeah, David, that's normal because it takes a little bit of extra time for it to actually settle out and close out. So that's fine. That's fine. Carl says, any thoughts on PCLN? None really. I've been watching this, Carl. I would like to get long it. I think it's going to have one more rally before earnings. If the market rallies, then yes. I think it's going to be okay. I kind of like this pattern here. I like this sort of pattern here where I feel like it's harder for the stock to get lower and it tends to ratchet up like that. We'll see. But I do like it. Ed in San Jose has a good point. If the euro reverses, it would imply that the dollar will gain, which will be negative for U.S. equities. I agree with you, Ed. Mm-hmm. You are correct. There could be negative for U.S. equities. Agreed. Eric says he's already short Euro USD. Yeah, I would probably do a little bit in the currency too. There's the trend line right there. Let me see on the monthly. There it is. Yeah, So on the Euro USD, you got to make sure to draw it just right. I would use the swing out method. And we're not quite there yet. We got a little ways to go. I would put out a short around 125, maybe another one at 126. Just leave it out there as GTC limit orders. I like it. Marcia, why not buy just straight calls? Because it wasn't a directional play on Amazon, Marcia. It wasn't the whole point of the play was that there was a chance when we had purchased it. We had purchased it for the theory that there was possibility that Amazon would settle out at 1,400 on its earnings. And it may or may not, depending on how it trades tomorrow. Right now it's at 1,470, so it would have a ways to come down. But on earnings day, anything can happen.
Let me back into that a little bit for Marcia. Remember, your long calls or long puts, you're directional. You can only go and make money one way. With the flies, verticals, if you position them right, you can make money if the stock goes up or down, depending on which side you're on, or you can even make money if it stagnates close to your mid-strike on the flies. So you give yourself an extra trend possibility when you do something other than just a directional trade.
Yep. Exactly. All right. Let me continue on. Anyone else with questions before I? Oh, Stockhead says Shell CMS. I love it. Thank you, Stockhead. I love hearing about Shell CMS. I didn't do anything on the pullback. I don't know if any of you guys traded this. You know, this is like the pair du jour, pair of the year, really, not just that. I know. I think I saw on Twitter some people were doing something on the pullback here. I think for me right now, it's a little bit too middle of the range-ish. I would like to pick it up a little bit lower, but I like it. I'm going to set an alert actually probably in here in the 40s right here. So if there's just a little bit of weakness, it's a pickup. So I agree. It's a pickup. And Ted says, what about Nike after the earnings momentum? Weekly. They're going to report on March 20th. Ted, this is not a chart that really excites me because you're kind of failing to break out here. I would think if anything, it's a short. For now, it's a look above and fail. If the market gets soft, I think it's going to take the stock down with it because you can see here that it is at a resistant area. And so stocks that are at resistant areas, when the market rolls over, they tend to get hurt. So that's that. All right. Anyone else before I turn the podium over to the one and only Scott Gillum? Anyone? And as always, I'll still be here working on some stuff. So I'll still be here.
I'm going to help Bruce out with his question there. So
what did you'll take care of Bruce?
Yeah, I'll take care of Bruce.
Okay, that's fine. Bob says CMS has a dividend coming up. Bob, you're exactly right. So I will be careful of that, and I appreciate that. A lot of times, let me tell you something. The Shell CMS or any pairs trades in general, a good pairs trade is when one of them goes ex-dividend, the one you want to buy. Because as you know, the stock is going to gap down by the amount of the dividend. And 9 times out of 10, that gap down is BS. And within by noontime, it can erase it. So what it does is it skews the relationship of the pair for a short while, just for a couple hours in the morning. And you can pick up that spread cheap. So I appreciate you giving that heads up, Bob. And I just wanted to tell you that it is oftentimes a buying opportunity for the pair. All right, Scott, over to you.
Okay, let me pull up my screen. Full screen share. Oops, full screen share. All right. So Bruce has got a question about how do you do the swing out method? This is the TOS 101 class like we did last week about Market Watch. So if you go to the settings or the style and settings, and then go down here to general, snap drawings to, and list it on OHLC, open, high, low, close. And if you'll mark this little checkbox so that it highlights itself, It'll always be there so you can turn it on or off. And what that will do is when you go to Style, down here you're going to have Snap Mode where you can turn it off or you can do anything else that you want. But to do a swing out method, go down to your point that you want to use, right-click, Add Drawing, go to your trend line, and you can swing. It anchors where you started it, and you swing with your cursor, and you'll pick up the first hit to this line. Now, I did not pick up the right, candle here, so all I go is back to the original anchor and move my cursor back over to that candle. And with that snap mode on OHLC, which is open, high, low, close, it will go right to the price on that candle. So there you go. There's your trend line. And let me make it bigger and do this again. So I'll do it once more for you. We'll get rid of that. So I'm going to go to this candle, right-click, Add Drawing, Trend Line, and now you've got the line. You can move it around. You can see me moving around. And I want to take the first hit that gets to this trend line. Oh, looks like that's the first hit that encompasses all the pieces. I had the wrong one before. Left click and you now draw your trend line. Hopefully, Bruce, that helps you out with using the swing out method. Anchor point, first hit on the price chart that encompasses everything. If it's an uptrending line, encompasses everything, so there's no candle below that line, and that's how you do that. I'll give you one other clue while I'm here with this. If you want to make a channel out of it, there's an easier way than just using the channel tool. Just right-click, duplicate your trend line, and then go back with the left mouse on that duplication, and you can slide a parallel line to that original trend line. Once you've got it where you want it, left-click again, and it anchors it as a parallel line to the original trend line. And this is on the SPX, by the way. All right, there's my uptrending line. We're nowhere close to it. We're above the 50. We're below the 20. Now I do a parallel line using, I give it the first hit. I don't try to capture all this up here. I give it the first hit where this trend line was at. Yeah, it came here, moved up above it, so I could add another one. But it's interesting that we've come in the last day back to this channel. Now, Peter talked about this. Do we come back into this channel and come back to the 20? Well, if we do come back into the channel, where do you have an expectation that we could travel without busting this uptrend out of its its original uptrending line? Well, you could come right back on the SPX down to 2763 or so. So that's how you do the swing out, how you do the channel, and what I'm looking at for the SPX. Hopefully that helps. All right, Bob, again, where do I get that snap? Style, Settings, General. Under Settings, Snap Drawings to, drop-down box says None, Bar Center, OHLC, or Tick. I use OHLC. Then I go over to the far right. There's a little arrow box there that when I click this, it says Display this setting on the Style menu. So it's there. Once it's clicked on, I'm going to say OK here. Once it's clicked on and I click again on my Style, that is now an item in the menu where I can turn it off if I don't like it, or I can put it on something else if I do. Hopefully that helps. All right. Thank you all for bearing with me on the two trades that I closed this week, the Square and Facebook. Facebook's been a long, lingering sore on the wrong side of my body. We finally got out of that. Thank goodness. I was on the wrong side for a long time in that trade, and I got out with what I think was a minimal amount of damage. Yeah, we lost about 50% of the original trade, but again, the premise was wrong to begin with because the market just careened to the upside. And then Facebook does its earnings, which is it blew me away as far as its earnings. Square, I may have taken that off early, but I was happy to take 50% profit on that one and then just say, okay, fine. That one is a little bit too frothy, especially with Visa, MasterCard, and PayPal coming in for earnings in the last couple of days. I didn't want to get involved with that machination. By the way, let me show you what Visa did today on their earnings. They had reported earnings today. Go to the 15-minute. Here you've got Visa down huge. You had PayPal today. Looks like eBay is getting rid of PayPal. Big drop in PayPal. Was concerned about them anyway. So that would have hurt. MasterCard, whoops, MA. MasterCard, yes. MasterCard reported this morning, had a huge move pre-market, then a big pop to the upside, gave back almost all of that gain, and it did finish up from yesterday, but not like it was expected to. So those are the trades that I'm out of. We've got the only thing left is the SPY as far as the put diagonal. If that runs out, we're going to be in a minor way, probably down $150 or so on that one. So that one, again, with the big short, was the wrong side of the trade. Not much of a repair there. We'll see what happens in the next, 15 to 16 days. As far as what Peter talked about, I want to go back to Facebook. Oops, got to do it right. Facebook. I like what Peter was talking about for a weekly trade on Facebook. I also want to look at a time spread. Facebook is probably going to run over 200 in the next 3 or so months going into their next earnings. We can take advantage of that. The one thing I want to pull on here for a study, though, is I want to load the study that gives me, no, that's not the one. That's not the one. I want to give implied volatility here. Where is that one at? Okay. And let's try this. Okay. Go to time spread. Let me just add in implied volatility, because that's really important when we're doing options on this, that we want to not be taken into implied volatility percent. There we go. We do not want to be taken into the fray of buying an option that's got a higher IV than we have selling one. Okay, here we go. So you can see that the implied volatility in Facebook options, Facebook options crescendoed right into its earnings, and now we're coming down. So we've gone from a high at about 38 IV, now down to about 25. So that's almost a 30% drop in the implied volatility. What does that mean when we look at the options chain? That means that we're going to get less when we sell, yes, but we're going to be paying less for the longer dated option, and we can bring that into our pockets. So if we go out 3 months, if I back up, this is on a daily basis. If I back up, here's January, here's December. Let's go into December. And we go back into early December. We back up into November. And so we're down in the low levels of about a 20 IV and still sitting at 24. So if we sell premium within the next week or so, we can still capture some of this premium that's left in the near dated options. And then on the further out options, they'll have a lower implied volatility. So a criteria that you want to set up for your calendars or diagonals: buy the lower implied vol, sell the higher implied vol. It doesn't always work that way, but that's what you want to kind of aim for. So I like Facebook. I'm going to be looking at something over the weekend to set up a time spread on that one. BABA, same thing. We've done a couple of BABA trades. I like the pullback today. Earnings are coming up. I want to see what they're like. Pardon me, they came up already. I want to see what they're like in a couple of days. So earnings plus 2 or 3 days is going to tell me, are they coming down to their trend line, coming down to their 50, or are they going to start to bounce? They bounced intraday today, but that was an intraday trade. That's not the type of time spread trade that I really want to get involved in. So BABA is going to be on my radar. Gotcha. Okay, the last one that I'm looking at, Peter mentioned this also, is gold. And I'm going to do the ETF GLD. ETF GLD, big move to the upside, a retracement. Now we've had this big move and then the fallback. Little move, fallback, move kind of up to there, fallback, and now the big move to the upside. But, as was mentioned already by Peter and some comments, earnings are going to end. The euro is getting to an extended range in its price. So if it rolls over and comes back down, I think this way for you guys, if it comes back down, that means the dollar is starting to strengthen. What's that going to do when we get gold in here? Well, we had strengthening dollar, falling dollar. I've got to see what the relationship is on the dollar starting to strengthen. Does gold now make its run to the downside? So I want to put this on my radar for another trade going forward. It may not be next week. It may be next week, just to see where it comes back into. Bitcoin failure in the past 3 or 4 weeks has been humongous. We're down about 50%. I think that lasts until probably the 1st of March, through the month of February, and then you're going to find a bottom in this Bitcoin debacle that's going on, or bubble, and it'll probably come back. So the pull out of Bitcoin went into something in the precious metals, and I think it was gold. And to the chagrin of those that got into Bitcoin from the middle of December, which was at its high at $20,000 a Bitcoin, to now I think it's under 10, if I'm not mistaken. So that has pushed gold up also. So there is a play in here on gold. I'm going to tag with Peter on that side. So those are my 3 that I want to look at coming forward: Facebook, BABA, and GLD. I'll also look at FXE to see if there's something we can do on a time spread there, but I've got to take some more look on it. I haven't traded FXE in probably 4 years, so I've got to do some due diligence on that for you. Other ones of note, I'm just going to give you a couple. Adobe, Alpha Delta Bravo Echo, support bounce coming. Looks like it's probably going to fail on that, and maybe a rollover further down. Applied Materials, Alpha Mike, Alpha Tango. I think there's more on the downside there. I'm going to be looking at that over the weekend. Disney comes up for earnings. I want to watch those earnings, do a 3-day, 2 to 3 days in that to see if there's a trend that can be reformed on Disney. Disney's been choppy. Let me just pull that chart up for you. Disney's been all over the, up and down and up and down and up and down. This is not one that is good to do time spreads on because it's just so raucous. Up for a day and then down for 7, up for a day and down for 5, up for a day, down for 2, up, down, up, down, up, down. But they've got earnings coming up. Their earnings are, I think, on the 6th for next Wednesday. So I want to see what happens afterwards, if they can smooth out this movement in Disney so we can do some sort of trade there. And that's it. I'll put this back on the SPY. Any questions for me? Eric, I agree with you on that. Facebook has to prove that they can make money with the new policy. Yet they're a cash machine. If you watched or listened to their conference call, Sandberg and Zuckerberg were phenomenal in their answers to questions, were phenomenal in their tonality of their confidence that they can keep this money machine going. And that's what you want to listen for on those conference calls. How do they answer the questions from the analysts, and how is their confidence level in their speeches? Oh, my body's in the way of the chart. Okay, I apologize. Let's go back to Facebook. I'll go back and just revisit that because you couldn't see the move of the implied volatility. Here's the implied volatility ramping into earnings and going here on Facebook all the way up to around 37. And now we're down to 24. And if I back out where Facebook bases or its lowest, that's 6 months. Let's go 2 years. It bases out down here around, 10, 13, and this before Christmas, or just before Christmas, we were down around the 15. Yes, the VIX was down much, much lower in proportion to where it is now. And that you should take that into effect. But the implied volatility from 35 down to 14, just take in half. Give us to about 20. We're at 20. 22 now, we could come back to 20. That's a great reduction in the implied volatility, which sucks out the extrinsic value of our long instrument. And if we can still capture some of it for our short instrument, that's what I want to do with this diagonal calendar setup. Randall, why did I get out of Micron? Okay, good question. Micron was the sentimental hit child, or out to the woodshed, for all the semiconductors going down and all their bad reports and things going on with them. I mean, they had a nice run, a nice move, and then they fell down in November. They rallied back up to their earnings. They couldn't hold their earnings report and their guidance. So you 1, 2, 3 days of down. That to me says, I'm not sure that I like this trend, because I had a trend line that was not here before. But once we bounced up, that became my trend line. We bounced to a high trend line that was just formed, bounced back down to the low. Now we're bouncing in this level. We made a 4 to the bottom. That's when I got out of that Micron, my personal Micron trade here, because it violated my trend line. Back in, and now we're playing games again with this uptrending line. This dotted line is a weekly trend line. Let's go back to that. This is the weekly trend line back from August that I had drawn before the last few days in here, a few weeks. So if we just hone in on this trend line goes to here, right? That week. Come on, get there. And it captured this week right there. So there's your trend line on a weekly basis. I did this last weekend. And now we're below it for the week, for this week. We've looked below, but do we look below and fail? Where's my 6 month? There it is. Do we look below and fail on this trend line for the week? Or do we actually violate the trend line at the end of this weekly bar? I'll have to see. I'll make a decision. But I like Micron going forward. I've done good with that. I've made money on this one for the past 2.5 years, the way it trades. So yes, I'll look at Micron once again. Eric, what do you agree with but don't trust them? On Micron or on the traders? Give me a little bit of who am I not trusting, Eric? Let me know. Did I say 300 on Facebook? No. I said if I did, I meant 200 plus. So I think it's got 200 in the cards very shortly here. And the conference calls. Okay. All right. So that's it from here. Let's take a look at the big boys as they start their conference calls. Let's take a look at Apple. Let's go to the 15-minute chart. Is really hacked up on here. Apple on the conference call. All right. Take a dive, electronic trading, take a run back up, electronic trading, and now we're settling down on the conference call to about where it was all day on Apple. They expected something like $7 move on Apple. Interesting. Let's go to Amazon. Tighten in here. Amazon. All right. Big push to the upside. Bigger push to the upside. Bigger push to the upside. Conference call. It's kind of probably where it's going to open tomorrow. All those that want to trade it after hours are probably done. Let's go to Google. Google's the one that concerned Peter. It concerns me. Big drop. Pop back up. Sell it off. Big drop. Pop back up. Sell it off. I think their conference call is not as listened to as Amazon's or Apple's. So this move down here, let's see what a Fibonacci on this move after hours. This is just a charge in futility. 50% retracement on the big down move put us right to where it stopped, went back down, back up to it, pulled over, and it doesn't give me any information. Okay, we'll see. It's within the ballpark. I think this was a $90 move on Google and a $90 move on Amazon or something like that. It will be interesting to see where they open up tomorrow. Apple is definitely the one I want to watch for. I have a personal trade going on with this one. It's what's called an exploding trade. You sell a put vertical and you buy a call on the upside. Put vertical pays for the call on the upside. If you were with our advisory when we first started, before it became a paid advisory, then we did one of those on Tesla. I'm going to look to do maybe some more of those in the time spread ones as kind of an aberrant one-off type of trades for you. Okay. All righty. Peter's is called away, so he's not coming back. He's got a lot of things that are calling him to be away from the camera at this point in time. So do you have any other questions before we leave? You should have gotten your daily updates already. I sent those out before we started. Be ready for Peter to maybe tweet to you, or pardon me, text to you a possible trade on either Amazon, Google, Apple, Facebook, the FANG stocks plus the Jumbotron stocks tomorrow. If that's it, I want to thank you all. I'll put myself back up here so you can see me. I want to thank you all for being with us today on the 1st of February. Remember, we only have 11 months left to go to trade this year. It's going fast. Take care. Be good. See you next week. Bye-bye for now.